seeing inflation in these areas, and he points to meat prices in particular as really escalating dramatically in the United States. He continues, and relatively less, consumers are spending relatively less on transportation and other categories, experiencing significant deflation in these areas. Is this something that that can apply to the Canadian context? And if it does, to what extent does that worry you?
You know, as you point out, and I raised this actually in my opening statement, you know, the Canadian the CPI is a basket of goods that reflects what the representative sort of household buys usually. Obviously, right now we're in a very unusual situation, and so many of the things that we normally buy, we're not buying. We're not traveling. We're not driving our cars much. What we are buying is, you know, we're buying more food. We're at home more. We're buying more home goods, things like that. Yes, the standard measures of inflation do not capture the reality that most Canadians are facing. So we are working with StatsCan to get some measures of inflation that are more representative of what Canadians are really experiencing. Keep in mind, though, that a lot of these effects will be fairly temporary. The economy is beginning to reopen. Stores, you know, essential stores have been open. Non-essential stores and services are beginning to reopen. You know, people are probably going to go back and start shopping. Their basket will probably get more back to normal. But there may be some long-lasting effects, and it's going to be very important that we understand those.
Okay, thank you all. Mr. Cumming will be followed by Ms. Kotrakis, who will split her time with Mr. Sabera. James.
Thank you, Chair, and welcome, Governor, and welcome to your new role. Although given the times that we're in right now, you must wonder some days, what did you get yourself into? But that being said, your predecessor we had a discussion when he last appeared on this committee about the importance of the resource industry pre-COVID, but more importantly, how important that sector was in the recovery of the economy as we go forward. Do you agree with that?
There's no question the resource sector, the oil and gas sector, is a big part of Canada's economy. And as Governor Poloz and Senior Deputy Wilkins have highlighted on a few occasions, the Canadian economy is, you know, it's getting a double whammy. There's the COVID crisis, but there's, you know, we've seen a dramatic drop in both the price of oil and the demand for oil. And you know, that is certainly affecting incomes in Canada, particularly in our oil producing regions. We have seen some rebound in the price of oil, and WCS, actually the Western Canada Select, is actually the spread relative to WTI is actually unusually small. So that's good news. Having said that, you know, oil prices are still well below where they were, and the reality is, you know, global demand for oil is probably going to be lower than normal for some time to come. So it's probably going to take a while to work our way out of this. But yes, that is an important, you know, an important element of the Canadian economy.
Mr. Cumming. Mr. Cumming.
When your predecessor was here, the bank had purchased, I believe it was 10 billion in corporate bonds. Can you give us an indication of what that number is now?
I'm going to ask Senior Deputy Governor Wilkins to say that it'll be quite a bit bigger. The program was just getting going.
Carolyn?
Yes, you're right that the intent is to purchase up to $10 billion in corporate bonds. That program just started, and so we haven't purchased the full amount as of yet. There's about $90 million that have been purchased, and you will be able to see that on our balance sheet as time goes on. We will be very transparent about the amount of those purchases.
Okay. And along with the corporate bonds and with other bond buying, the balance sheet for the bank, it's pretty much quadrupled. How sustainable is this? Are you concerned about, like, how long can you keep up this size of purchase?
I'm not concerned about the size of the balance sheet. The expansion of the balance sheet is entirely necessary to implement our stabilization of the funding markets and monetary policy. If you look at our balance sheet compared to a number of other central banks, it's still relatively small, and we have significant capacity.
How concerned are you about if increased liquidity and for the most part that is involved with the banks doing deferrals, both for consumer deferrals on mortgages and on corporate deferrals, but the capacity of the marketplace to be able to repay that deferred debt? Are you concerned that come this fall that we're going to see a fairly steep condition for both businesses and individuals to repay that deferred debt?
So with respect to the debt, look, this is a risk. And for some time, the Bank of Canada has underlined that household debt is high. The government, CMHC, have taken a number of actions to try to ensure that the debt levels of more vulnerable Canadians are not going up. We don't want to get Canadians into more debt than they can handle. And so there have been a number of what are often called macro-prudential measures that were taken by OSFI, by the government, by CMHC. There have also been some provincial initiatives with respect to the housing market. And those are helpful in making sure it's not only the level of the debt, it's who holds the debt. Some people have the capacity. What you want to do is make sure that others don't. So yes, it would have been better if we'd gone into this crisis with less household debt. But the fact that we've lowered interest rates, that is making that debt easier to service. And by the fiscal programs that are replacing the income lost are helping people service their debts. And as I said before, the most important thing to servicing your debt is having a job. And we've got to support recovery and get people back to work.
Okay, we will have to end that round there. We'll go to Ms. Katrakis, then on to Mr. Lemur, and Mr. Julian, and Mr. Cooper to start the next round. Go ahead, Annie. Splitting your time with Mr. Sabera, I believe.
Yes, I am. Thank you, Mr. Chair. Congratulations on becoming the new governor of the Bank of Canada, and welcome to the Finance Committee. Hopefully your tenure will eventually become less demanding than it is at this critical time. A few weeks ago, I asked your predecessor, Mr. Poloz, if our economy, which is forecast to resume growing again in 2021, following a possible 6% decline in 2020, recover the growth lost in 2020. He was quite optimistic that we can regain growth and even recoup lost ground relatively quickly as the economy will be operating under its capacity. Given what has happened since that time with COVID-19, such as the gradual reopening of our economy, are you as optimistic as your predecessor that we can achieve strong growth? And what can the government do to ensure that we recover our lost growth and reach our full potential as quickly as possible?
Okay, well, it's a pretty big two-part question. I think I'll focus more on the first part because I think I've spoken quite a bit to the second part. With respect to the first part, I mean, since Governor Poloz and Senior Deputy Wilkins were last at this committee, we have seen that the economy has stabilized. We probably hit bottom about a month ago. We saw 290,000 new jobs on a national basis across across the country in May. I think it's important to stress, though, that different provinces are opening at different speeds. So the experience, depending where you live in Canada, may be different. The other thing I would stress is that this crisis is affecting Canadians in different ways. Unfortunately, the crisis is disproportionately affecting the lowest income workers. You can see in the labor force statistics, women, recent immigrants, youth are particularly affected. Their unemployment rates have gone up the most. So, I am optimistic. So the good news is we are starting to see some rebound. The economy is, the containment restrictions are coming off. I'm optimistic we are going to see, we expect growth to resume in the third quarter. I think we could see some good numbers. But I would stress that, even the good case is still pretty bad. We've seen an unprecedented decline in economic activity, and it's a long way back.
Okay, thank you, Mr. Sabara.
Thank you, Chair, and thank you to my colleague for splitting some time. Again, congratulations, Governor, on your appointment. When the COVID-19 pandemic hit, it knocked off, from what I've understood, about 20% of our economy, about the Canadian economy. 20% was taken offline. Obviously, in economics, we use the term output gap in terms of measuring where Canada's output gap is. So I'd like to get your thoughts as the economy goes along. So sort of where we are in terms of that output gap, how quickly we can close that output gap. And I have a follow-up question afterwards.
Well, as I indicated previously, we are, right now the staff is updating our economic outlook. The last monetary policy report gave two quite different scenarios, one a more optimistic one a quite dire one. Now that the economy is stabilized, starting to reopen, while there's still a lot of uncertainty out there, and there's particularly a lot of uncertainty about the course of the pandemic, that range of uncertainty is narrowing, and our intention is to provide at least a central scenario in the next monetary policy report. So that will, at that point, we'll be able to say more about what the size of the output gap is. What I would say, though, is that, one thing that is very unique about this crisis is that they're both important supply and demand effects. By locking down the economy, we have shut down supply in large parts of the economy. And as that supply reopens, our expectation is that demand is not going to reopen as much as supply, so there will be a sizable output gap. And there's going to be a lot of uncertainty about that, but we will begin to provide some estimates.
And if I can do just a quick follow-up.
Go ahead.
The famous term liquidity trap by Keynes about deflation, and in terms of tying that in with your counterpart in the United States, Fed Chair Powell, in terms of his famous quote in the last week or so, not even thinking about raising rates. Care to come up with
is very unique about this crisis is that they're both important supply and demand effects. By locking down the economy, we have shut down supply in large parts of the economy. And as that supply reopens, our expectation is that demand is not going to reopen as much as supply, so there will be a sizable output gap. And there's going to be a lot of uncertainty about that, but we will begin to provide some estimates.
And if I can do just a quick follow-up.
Go ahead.
The famous term liquidity trap by Keynes about deflation, and in terms of tying that in with your counterpart in the United States, Fed Chair Powell, in terms of his famous quote in the last week or so, not even thinking about raising rates. Care to come up with a famous quote this afternoon?
I wish I could be so eloquent, but I'm still a very new governor. Give me some time.
Okay. Not thinking about thinking. That's quite a line there, Francesco. I know it's not yours. Mr. Lemaire will be followed by Mr. Julian, and then on to Mr. Cooper. Mr. Lemaire, 3 minutes.
Merci, Monsieur le Président.
Thank you. Congratulations for your new position. My first question. We're hearing the government remind us that the situation is too unstable to be able to present an economic update. Do you think that the situation has stabilized since the first announcements made by the government in March? The government had decisions to make, and the government has been quite transparent with regards to